Hi, I'm Candy Evans, and this is Dallas Dirt. I'm so excited and proud to have here on the podcast today. Let me introduce you to Abteen Vaziri, who is the founder and CEO of Uptown Companies Incorporated. He is a recent transplant from New York. He's also starting his own law firm here because this very intelligent man has a JD on top of his MBA, on top of all this wonderful experience that he has in the finance world, which is what we're going to talk about today, is what is so exciting about Dallas and how Dallas is really going to be bigger than New York and even Miami, which a lot of people are saying Miami is where it's all at, right, with real estate and commercial real estate. But Abteen says, no, it's Dallas. Tell us about that.
Absolutely. Well,
And
Candy,
welcome.
it's wonderful to be
Thank
here.
you.
I've been wanting to come to your podcast for a while now. Finally, we made this happen. Thank you for inviting me. Yeah, I moved around as a child all around. I immigrated from Iran as a political refugee. My dad was in the Air Force, so we fled Iran in '89.
Right.
Lived in Germany for a couple of years. Lived in Los Angeles until '95. Moved here. Went to Plano Senior High. So the whole family's here. My mom, my father just recently passed away, but my sisters, and my three beautiful nieces, they're all here. And this has been home. I moved to New York 8 years ago to head up basically the EB-5 practice for a very large institutional lender in New York. And I stayed there, finished law school there. I made a lot of connections, met everyone in real estate lending, and made some amazing networking connections in New York, but this was always home. And I just see the opportunities that Dallas has that I don't think any other metroplex in the United States has.
That's right.
There's been this trend, people moving out of the blue states into red states, but no other two states have this trend, mainly because of the no state income taxes as Florida and Texas. However, a lot of New York City real estate developers, they really like Florida because a lot of them are familiar with that market. They have second homes there. That's a market that's been booming. But there's some really big challenges in Miami. There's severe infrastructure issues. There's not enough highways, and there's not a lot of land to develop. It's pretty landlocked. You have South Beach, which most of it you can't build. They're all Art Deco historic buildings, and then so a lot of development has gone either north or to they rebuild Brickell, they rebuild downtown, but there's not that much more land to develop, so they have to tear stuff down to rebuild. The other thing is Miami doesn't have, or South Florida doesn't have, the school systems that Dallas has.
Interesting.
At a conference, Barry Sterling from Starwood mentioned that. It's like there's not enough public schools, there's not enough private schools, there's not enough elite universities.
Right.
Dallas has all of that.
We have all that.
Dallas has.
Exactly.
I have a friend that suffers from cancer. He's from Los Angeles, moved to South Florida. He lives in Miami. He still has to go back for cancer treatment in LA. He just doesn't trust the hospital. I mean, you look at New York, you have the various different hospital systems. In California, you have UCLA. But in Florida, you just don't have that. Here we have the Baylor system, you have Southwest, and they just announced they're building another $10 billion children's facility.
Children's
It's huge.
facility. It's
Miami will never be. Now, one prediction that I'll make, I think 20 years from now, Miami is going to replace Los Angeles as where the $60 million homes are, where entertainment is, where international people are, where arts and fashion and movie industry is, but not financial. It's not going to be the financial capital that New York is. New York doesn't change their ways and they don't change their politics. All that middle class, all the financial companies, they're all moving here. I mean, this is a huge announcement. Goldman Sachs is moving a huge corporate headquarters in Uptown. And by the way, Bank of America is building a massive building. JP Morgan, all these big banks, this is it. This is where they're coming. And in 20 years, and the great news is in 360-degree direction, north, south, east, west, there's land and you could build and you can build and you can tear down old stuff and build new stuff. The opportunities here are just tremendous. And one of the things that I've been focusing on, I wanted to come back to Dallas, is not just to help build Dallas. Dallas has done great. In North, there's been a lot of growth. But to help rebuild downtown Dallas, to me, it's just an enigma. It's one of the major cities in the United States where office rents are $20 a foot. You go to downtown New York, Hudson Yards, $200 a foot. In Miami, $70 to $90 a foot. In Frisco, it's $60 a foot.
It's more in Frisco than downtown Dallas?
Because all the corporate headquarters are moving to Frisco because there's cheaper homes to buy, there's the better school systems. So they're moving their headquarters there. Downtown Dallas just hasn't been able to compete with various other cities. Their biggest competition for Dallas is really the other suburbs. And Frisco has an economic development team they're writing the playbook on economic development. Other cities around the country are copying them. They've done tremendous. They have a huge tax surplus, so they can afford to go get companies to come bring them here and not pay taxes for 30 years. Their tax bases in 30 years, when all those companies start paying taxes, is going to be crazy. I remember when I moved here in 1995, In 1996, I was taking a college course, and I would go to the Frisco, Collin County campus to take a drafting class. And Preston was a 2-lane highway. There was nothing in Preston.
Yes. Oh, I remember that
And
too.
there was a dealership on the corner where the mall is. And then, unfortunately, there was a place that I was 18. I didn't know what it was, but it was a brothel. I mean, that's what Frisco was in 1995. Today,
Well, it ended at like El Dorado. That was the tollway ended
but
there.
today they're building $10 billion project here, $10 billion Starbucks.
Let's go back to EB-5.
Sure.
Can you just tell us what is the EB-5 program and how does that help us in real estate?
Sure. So the EB-5 program that was passed by Congress, Ted Kennedy was actually the champion of it in 1990. They actually copied this program from Canada. Canada was one of the first countries that had it. They didn't have a huge population. So they started this program and said, if you invest this amount, you can qualify for residency.
People who are not citizens, correct?
People who are
Right.
residents of other countries.
Right.
People in the Congress at the time kind of copied this and said, well, we don't want just an investment program, but we want a jobs program. If you come and invest and you create 10 jobs for U.S. citizens or residents that at least work 35 hours or more, you can qualify for this program and get green cards for the entire family, all qualify under the same in one investment. And so EB-5 is actually an acronym for employment-based fifth preference. So in the Immigration Act of 1990, which imagine since 1990 we haven't had another immigration bill. But under that, they approved something like 700,000 visas. The first preference is, which is they get preference over the other category. So EB-5 is the last preference. I think one's for religious workers, one is for people with extraordinary abilities, all these different categories. And then the fifth preference, the only visa category when an investor sponsors themselves. So every visa category, whether it's a family-based category or an employment-based category, either an employer has to sponsor you or a family member has to sponsor. So you don't control your own destiny. If you get fired, that visa goes away. Under the EB-5, you sponsor yourself. And then and this program wasn't very successful. And in 1993, they passed the EB-5 pilot program where it said, well, you don't have to necessarily go build a business because a lot of immigrants were coming here, the businesses were failing, and then they would not get the green card. So it wasn't doing what it was intended. So in 1993, they created the EB-5 pilot program, the regional center program. They said that as an investor, you can invest in a regional center. And what a regional center is either a for-profit or nonprofit entity that basically is like a fund that manages and puts these investments together. So then the investor, by virtue of being a member in an LLC or a partner in an LP, could qualify for creating those jobs just by virtue of voting to make those investment. So again, this program wasn't very popular in the 90s. Only a few hundred investors did this. Fast forward to 2007, banks stopped lending, real estate wasn't happening. A few lawyers and a few really smart real estate developers started thinking, well, this may be a way that we can raise alternative capital to do real estate projects. So 2007, the EB-5 program started getting very popular. 60% or so of the money was going to the state of California. A lot of projects were getting done in California. And then the program became very popular to 2013 to 2017, something like 15 million a year was coming through this program.
Oh, and so the money was coming from overseas then?
The money was all coming from overseas, and actually something like 80 to 85% of the money was coming basically from Hong Kong, Taiwan, and China. So basically mostly China, right?
Yeah.
In 2019, the USCIS raised the investment level from 500,000 to 900,000, and that, along with COVID and the slowness and response times by the U.S. Citizenship and Immigration Services, made the program basically moot. In 2011, Congress canceled the program, and then I worked with various different regional centers, a lot of different lobbyists, and a lot of different folks in Washington. In 2022, we brought the program back. Today, it's not as huge as it was, let's say, 2013 to 2027 or 2017. But there's still about $2 billion a year coming through the EB-5 program, and now investors from everywhere, from China, from India, from Vietnam, from Hong Kong, Taiwan, all over South America. So now it's a lot more investors from various different countries.
And that's good for business because the money is not, maybe you can kind of talk about that a little bit about why is capital so hard right now?
Well, capital is really hard right now because one, banks have tightened the lending because interest rates have gone up. Two, if a project, you're doing your model and now you have 7% cost of capital. Before interest rates went up, now doesn't pencil out. The ones that do pencil out, banks are hesitant in lending, or banks were lending all day long in multifamily asset. Today, they're very strict on what they're lending on. So the entire market has kind of contracted, and the Fed is really forcing banks to not do so much lending. And so today is actually another time where, again, it's coming to like 2007, EB-5 has become very popular.
Because that's where we can get the money, capital.
However, it's just not as much volume. And the rules of the program have changed. When we got Congress to approve on a bill, they basically set aside or kind of a favoritism towards the rural states, whereas today there's a mindset, and it's actually true because it's happened. Investors were taking 3-4 years to get their green card approved. Now they're getting approved in 7 months if they happen to be in a rural project. Where before people were really interested in New York, LA, Dallas, big major metroplexes and these massive projects. Today the projects that are raising money in rural areas, so ski resorts, hotels and ski resorts. There's a project in Arkansas that's a steel plant. So these type of projects are actually getting economic development, which is good. It's good for these rural areas that don't have the outside capital.
Interesting.
Otherwise.
So that's probably another reason why we see so many people kind of leaving. I mean, they're wanting to spread out from the urban areas, correct? Because there's more out there?
Yeah, there was a lot of that during COVID. I think people in the 50s, there was this, the trend was everyone was going to suburbs.
Right.
Then in the late 90s, 2000, everyone started coming back from the
back
suburbs.
in.
Now everyone's like, well, if COVID happens, I could be in the country and have a lot more freedom. So,
Right. I
so
can
now
still
it's
work. I can
going,
work
it's
from
kind of
home.
going back
Right.
to the suburbs and
Right.
going back to
Just
rural
spreading out.
areas.
I was
Right.
talking to a developer down in Cinnamon Shore, down in southern Texas near Corpus Christi, and she said that during COVID, they actually were selling phases that were planned, like they were selling them without people seeing them. It was so hot, and so they said, "Well, okay, we'll plan phase 3. Okay, we'll plan a phase 4. We'll do it now and sell it." I mean, they didn't have to advertise or market or anything. It was just so incredibly hot.
I mean, I'll give you an example. I was living in New York City during COVID, and a common friend of ours told me, what would you do if the world ended? And I said, buy some land, live off the land. So we'd do it. And I did it. June 2020, I bought a 55-acre house, with a, basically a rural house in Athens, Texas. So I've had this place. And I was thinking, okay, well, what would happen if the world ended? You can go grow some crops and live off the land. And I did that myself. So.
Yeah, definitely. I mean, ranch land and farmland is really gone up and much
Hot commodity.
more.
And at the price that I bought it, I think the value is triple just based on the land value itself.
Wow.
So it was a good investment. Let's say.
It's a great
It was a great
investment. Well, we are always excited to hear about what you think is in store for Dallas down the pike. And I know you're here now and you're living here and based here and you've got your family here. And what pockets of town do you see are going to be really hot besides down? Do you think downtown's going to turn around?
I think from my experience, over the 10 years I was here for 20-something years before I moved to New York, but 10 years I was focused on real estate. Before that, I worked a couple different hedge funds and long short equity and focused on equities. But really, the 10 years or so that I focused on real estate, everything really moves a lot north here, and it's moving east. Obviously, if you go west, you're Fort Worth. South, there's some great pockets, great investment, but historically, everything's been moving east and north because Cullen County had some really good school systems.
Right.
So it was like Frisco, then Salina, and Prosper, and McKinney, Anna, Melissa. I mean, you're going all the way to Sherman, but I've been hearing this last couple of years, Sherman and Texoma, that's been a hot area. People have been buying land. I remember 20, 30 years ago, there was all these rumors that Disney was going to buy a massive amount of land and build a park there. That's actually now happening, but it's in Frisco. However, what's really happening, and it was announced, is between Hard Rock and Margaritaville. They're building a $10 billion development and building a water park resort, a casino right on the border of Oklahoma. So that's a massive $10 billion project. But there's so many of these $5 billion, $10 billion, $2 billion projects all over the Metroplex that are planned. Most of them, majority of people I've not heard about. I get to hear about this stuff because typically people 2 or 3 years before they even think about development, they're going out of the market looking for alternative financing or debt financing.
Man, so that's why
so I get to hear about
exactly.
the deals much faster than the world gets to hear about them. But the stuff that's coming to Dallas is just incredible.
Yeah.
I mean, everyone's heard about the Adelsons buying the Mavericks. I mean, the Adelsons are one of the largest political contributors to the Republican Party. The only people that have been opposing casino gaming has been the Republican Party. So it should be a shoe-in for them to get casino gaming, whether it's good or bad.
Right.
That's going to generate. It's going to generate a lot of real estate activity.
Exactly.
It's going to generate a lot of revenue coming here. And one of the things that's Mark Cuban's actually right talking about. He doesn't have a competitive advantage anymore. The tech kind of advantage that he had is debt. The new theme in stadium development is basically the copy of what they did in Los Angeles in the Staples Center. You build a stadium, you build the condos around it, you build the retail around it, and it's a huge play on real estate. That's how the team owners make a ton of money, not just for all buying these teams for $200 million. They're worth $7 billion. they're doing that, but on top of that, they're making so much money from the
Estate.
ancillary.
Yeah, exactly.
And like you look at a market like Philadelphia, they have like 4 stadiums in the middle of nowhere. That used to be the old model. Those stadiums, even though most of them are new, they're gonna have to tear them down and rebuild them because they're not
Wow.
making any money from the retail around it,
retail
from the
around
condos
it,
around it. It's like the new concept of live, play, work, everything in one area.
Right.
And even American Airlines Center, which is that's already getting old, and they're gonna have to come up with a new. So if the Adelsons bring a massive casino and retail and shopping and mall and all of that to one location, that's going to be generating a lot of economic
Well,
activity.
that's what I said when I was running for city council. I said, I'm not sure I condone it, but I Valley View, that Midtown, perfect right there. And then have
Right.
a luxurious high-end casino and have
Well, I think the piece of land they're
apartments and
looking
all
at
that
is in Irving, the old
Yeah.
Texas Stadium. But you know, I've heard rumors that Mark Cuban's bought some land in Mustang, Texas, and Navarro County. So who knows?
Who knows,
But
yeah.
the one thing we will 100% know now is there's going to be a lot of real estate development happening in Dallas.
And that was like the
And my
first
goal is
key.
I'm setting up a
Yeah.
law firm to help real estate developers come figure out local, state, and federal incentives. There's
Mm-hmm.
all kinds of incentive programs. The Department of Transportation has TIFIA funds, DOT or DOE has, all kinds of energy-related funds, building electric infrastructure.
Yeah.
City of Dallas has one of the most sophisticated TIF districts. I mean, the
Yes.
tax and finance, there's something like $2.5 billion in taxes in there. The increment is what they fund. And currently they have somewhere between 600 to 800 million in TIF funds to give out. So my job is to help package that together, work with real estate developers, show them how to get these incentives and trying to bring money from New York, from Middle East, from Asia, from all over to come here and help us rebuild Dallas, but more important, downtown Dallas, which
Yes.
really needs the investment. And one of the things that's really interesting about downtown Dallas is there's about 7 to 10 major landowners, and they're all sitting on land that they know it's a gold mine because they know there's a huge arbitrage opportunity. How can downtown Dallas have office space at $20 a foot when Frisco's got office space at $60 a foot?
60, yeah.
Just doesn't add up. So they know the land's going to go up. Some of them have the money to build, some of them don't. But none of them are doing anything. They're all just sitting on their land.
Right.
My job and my goal is to help bring this outside capital in. But the outside capital doesn't want to come in. Like I talked to very large real estate developers in New York. They're building in Miami. They're building in Park Cities. They're building in Arizona, but they're not building in Dallas.
Why?
The reason they're not building in Dallas is because they need someone to put the whole deal together, shovel-ready project, all the incentives ready for them,
Right.
everything's ready, and they come and say, come invest. And no one's done that. And the landowners, they're just kind of sitting tight because they know that their real estate is worth a lot. They're just, it's just a matter of time. They have very low carrying costs, so they have no risk. They're just sitting there waiting for somebody to come knock on the door. So there's a market there. It's just the ask and the bid is not meeting in the middle. I'm hoping
You're going to be the middle.
me and a few other people that I'm going to be working with to really help bring that money in. But how does that work? We got to go lobby the city of Dallas, show them if you invest X in this developer, you're going to get this, and you can have the convention center, and you're going to create this much more tax basis. This is what you got to do. At the end of the day, what downtown Dallas needs is security. They need more cops. They need better, streetscaping. They need a mall, and they need shopping
Yeah.
and retail.
Yeah.
And one thing that would be the home run, and that's how Brickell. I mean, Brickell was a no man's land in Florida. No one wanted to be in Brickell, and there's a company called Swire Properties out of Hong Kong, which is actually British owned. They came in, they spent $2 billion, built the Brickell Mall, and then now Brickell is the most expensive real estate. All that came in. So what we need
Been
is
there, it's
our
great.
Swire Properties to come to downtown Dallas, build a very nice luxury mall somewhere in downtown Dallas, and the rest of it is just, it's going to fall into
It'll
place.
fall into
Right now, we
place,
don't
right.
have that. Maybe we won't get a Swire Properties that build a $2 billion mall, but we need something
Like that.
something like that.
Yeah.
And we just need the catalyst. The investments are there, the money is there, the location is there. We just need the catalyst.
Will,
And
will the convention center help?
the convention center will help, but at the end of the day, you need the private equity funds, you need the big developers, and you need the sovereign wealth funds to bring in the capital to invest. And right now, it's just we're not on the
Because they're
radar
not going to come for the convention unless there's something to do there. They don't want to.
and the big funds that are coming, they're coming to Frisco. They're coming.
Yeah,
They're not
yeah.
paying attention to downtown Dallas. Now, the city of Dallas has a great economic development. They have one of the best TIF districts. They just need some help. So all of us have to roll up our sleeves and help them make that catalyst. And the catalyst is you got to get the incentives. You got to split the incentives. You got to split it fairly. where it incentivized these money sources to come here.
Right. And you have to get people to stop thinking that this is giving money away, because it's really creating more money.
That's what the TIF district is. You give money away, but then it generates more taxes. So it just keeps the tax bases higher and higher.
Right.
And this is the perfect example of a successful public-private partnership. Right? I mean, I'll give you a great example. There was a bunch of swampland around the airport in Newark, in New Jersey. And there was a public-private partnership. I think it was one of the cases I studied in law school. It was a public-private partnership. The city, I forget, Elizabeth or Newark, whichever it was, they gave a bunch of land and incentives to IKEA to come build an IKEA. Everyone fought against it. It's like, oh, this is corporate favoritism. You're giving money away. That IKEA today is the highest grossing IKEA on the planet. So it was a home run. Now, granted, IKEA made money, but guess what? It did wonders for that
Everyone
economy.
made money. It's like the rising tide.
My theory is always don't look in other people's pockets.
Yeah.
It's like it's when everybody won in that situation. The taxpayers won, the city won, IKEA won, everyone won. But sometimes people will be like, well, I want to win, but I don't want you to win. That's just bad mentality.
Right.
It's like don't look in other people's pocket. If it benefits the economy, if it benefits the local group, if somebody else is making money, they're going to make money anyway. Why not make money in your community and build
whenever
your
you
community?
see an empty piece of land that's just sitting there and collecting litter, that's no tax revenue for your city. That means you're going to pay more in property taxes.
100%. I mean, the Statler project I worked in downtown Dallas, that was a project that was built in the 50s. It was one of the best hotels in the country.
Yeah.
Everybody, Ike was there, Michael Jackson performed there, Tina Turner performed there, it was Sinatra performed there. And then this building was vacant for 30 years. It's dilapidated, and the city wanted it being torn down. We have to think about all these different funding sources, including the EB-5, including TIF financing, including historical tax credits. Now that project is open, and now there's building other projects in downtown now. But somebody's got to be the kind of the maverick to do that, and the only way that we're going to really build downtown Dallas is we got to get outside capital. And the way we get outside capital is we have to give them incentives. We have to make it attractive for them to come in. Otherwise, they'll go to other cities that are giving them incentives.
Exactly. Do you think sometimes, as I do, and maybe I'm wrong, but I think sometimes that the problem with Dallas is there's too many families, local families, who are like controlling everything, and they don't want outsiders to come in.
That is true. That is true. I mean, Dallas definitely does have that mindset. Just if the incentives are there, if the opportunity to make a return for their investors are there, they'll be here. It's just that nobody is incentivizing them. No one's going out there to attract them. So we just have to do that. And by the way, the city of Frisco is doing that. Other cities are doing that. Dallas just doesn't have the resources. And I think private developers, organizations, nonprofits, people like us have to help them because this is our city. We got
and we have to write about it. We have to talk about it. One of my favorite, the best story ever is the stadium up in Frisco that they share with the high school. I mean, I talk about that all the time. It's like, what a smart move that Jerry Jones made with that. Well, I'm sorry we're out of time, but we'll do this again. Totally.
We'd love that.
And
we'd love that.
This is wonderful. You're obviously you know so much and you're such an expert, and this has been a lot of information.
I wouldn't say that, but thank you for
you
very nice gesture.
I know. Thank you.
Thank you for having me, Candy. And it's always a pleasure speaking with you.
Thank you. Thank you so much for joining us for this episode of Dallas Dirt. Stay tuned because there's always going to be more.